Hi, this is Mark with your analysis for the week commencing the 27th of January. I've explained on many occasions why I concentrate on just a few pairs when trading, and primarily my pairs are the pound dollar, the euro dollar and the euro pound. And that's because I live in the Eurozone, but I'm also English and therefore I have knowledge of the news and fundamentals in both of those countries. Another pair that I concentrate on is the Aussie dollar. And in the last few months, maybe the last 6 months, the Aussie dollar has been the most profitable of the pairs that I have traded and has been the easiest to trade. My New Year's resolution is to trade less. I want to simply place a trade a week if at all possible, walk away and get on with other things. And the Aussie dollar is still allowing me to do this. In the last 3 weeks, we have shorted at the 105.70 area, and it did it almost to the pip again last week. And it came down and I was looking then to long 104.30. So these areas still are the important areas for me on the Aussie dollar, and therefore I will continue to trade it. Also, if you're looking to trade intraday, I was explaining last Sunday when the market had closed on the Friday, look for bounces at 105 if you're trading intraday, and therefore you had the opportunity on the Monday to long, the Tuesday to short. You had the opportunity to long again on the Tuesday, short again on the Wednesday. The Thursday you would have lost, and then on Friday it's come back down to this 104.30. So it has been very predictable, and the great thing about this, it has been behaving very predictably from long-term charts. Does it mean it will go on forever? No, of course. And were you to suddenly dive in now, then Murphy's Law may be that that's the time that things change. But there's positive news out of China this weekend. Eventually this will pop, but until it does, I continue to trade the bounces. Euro yen, I explained in recent weeks how I have missed most of the euro yens, but I said to you last week, if price pulls back to 117 on the euro yen, and bear in mind at the time the price here was up at 120, well, as I was explaining, this is about patience and discipline. When price has set off, it's like a steam train hurtling into the distance. You do not try to jump on when it's moving, because more times than not it will simply turn round and go back the other way, and you will find that you have bought right at the top. I have done it hundreds and hundreds of times in my early days. So what I suggested was look for a pullback to 117, and I managed to catch finally a very big move off one of the yen pairs, and it's currently, the balance is up 500 pips. So thank you to Mary in the forum, because I've been following what she's been having to say. She's very good at trading the yens, and that has helped me as well. But this, notice how important this monthly 55 EMA has been on here. So once again, looking at monthly charts, it did it the week before, it did it last week. If you're not on here now, then well, you've got to look for a pullback again, and that would be the ideal place. Dollar yen. Now the dollar yen, I haven't been trading the dollar yen, but I'd said last week for 87.50, and it didn't quite make it. But look at the importance again of this monthly 55. We got the break, we got the pullback, and it's continued to move up. I'm more wary with the dollar yen. I think at some point these yens really are going to turn back down, but if you're going to be looking for anywhere for a long, that will be the place. Now the Euro USD, in recent months I really lost the plot with this. I started to trade the Swissy more because it was a lot more predictable, and the Euro is now looking, we're going to get the monthly candle close very shortly, it looks as though it's going to close above this 55, and this 55 EMA held this pair down for the last 5 or 6 weeks. We could be on for a run with this Euro USD. It's absolutely, utterly illogical, but there was positive news came out last week, and it was almost a drip of positive news, and therefore perhaps as again the perception has shifted that the dollar is now in a worse state than the euro, not particularly that the euro is getting any stronger. So how do you trade it? Well, this is on a weekly, and on a weekly we've just been showing you how the dollar yen and the Aussie dollar have been reacting to these big EMAs. Well, here on the euro you've had that break and close above the monthly 55 EMA, and therefore I will be interested to get a pullback down here. Last week I was saying to you I wasn't going to long in its current position. The reason being I was concerned it was going to stop here at the double top, and it's done it almost to the pip. So really for me to get involved, if it keeps going, I would want a clear break and close above 135.00 followed by a pullback, then with a move forward. If I'm going to trade this intraday, then I would look for 133.70. If we get a big drop on the euro, then it may take weeks to do that. Then we start looking on this trend line, because at the end of the day we are trying to trade with the trend. Same pair on a daily, and you can see that's that double top area where it stopped last week. But look how important this monthly 55 and weekly 200, both in the same area, of course. Price has come up and it has been support and resistance, and therefore, as I say, if we get a pullback down to 33.75 area, I will be interested to long the Euro USD. Swissy, I had a very good run pre-Christmas, then it got very messy and illogical. We've now had a 5-8 cross, stochastics rolling over, MACD rolling down. It's still too messy for me, really. One thing to consider is potential shorts of the weekly 55, and will only be interested to short this pair at the moment. More conservative is look for a break and close below 92 with a view to a further short. Pound dollar on a monthly, I showed you how this trend line has been in place since September 2008, and therefore this is a long-term monthly trend line. If you are trading this of a monthly, then you wait for the candle to close. But what we're looking for? Well, we're looking anywhere around 15700 for a potential bounce back up, because it has done it on multiple occasions. Now, if it breaks and closes below this area, then we could be on for a very big fall with the pound dollar. And there has been a drip of negative news from the pound, and there's now talk of double and triple recession that's been formed in the UK, and the Governor of the Bank of England has mentioned printing yet more money, which is a surefire recipe to weaken the currency. And therefore, that's the area on a monthly I will be looking for. If it breaks, I will then look for a pullback with a view to a potential big short. Same pair on the weekly. Last week we went hardly anywhere. We bobbled along 15800. If you're going to trade this intraday and you're not going to wait for it to get down to 5700, then wait for a break and close below 5800, then a pullback with a view to a short. CAD done very well pre-Christmas, and last year we had long periods of time where you can see here that the 55 EMA and the 100 parity level held, and this held for 12 months or more. Each time it hit it, it bounced off it. Finally it pulled away, then it was relevant again around here, and then again last year we had 5-6 months where it kept doing it. The other day, bang, it went straight through. Now once again, if you've been trading this for years, then on balance you are well in profit. However, if you just jumped in the other day, it's unlucky. I am only interested to short this pair. However, we could be on for a little bit of a run up. I will start to consider shorts anywhere around 10200, but I will advise you later in the week. At the moment, I do not have sufficient clues for me to calculate where it's going to go next. So for now, I'm going to leave the CAD. I'm also going to leave the Aussie dollar yen. The Aussie dollar yen on a daily chart, what you could be doing here is you could wait for a break and a close above 9500 with a view to a long, or a pullback here down here to this trend line around 9200. Personally, I would prefer that one because we are at extremes, and we've had 2 weeks now trying to break 9500 and it's not happened yet. You'll also notice on some of the yen pairs we have MACD divergence still. And MACD divergence, you know by now, pattern on MACD is reflected here, but the high down here is much lower, and therefore the theory goes MACD divergence suggests that price will reverse or will at least pull back. So zooming out, I have gone on about this for months now, about zooming out, and as I said, for me, if you can take 1 or 2 trades a week, that has to be the ideal. Have a good week. Be very careful later in the week because of course it's NFP and there is a lot of news this week. Have a good week.